Hello and welcome to NWR Communications special webinar on antimony, one of the standout critical minerals of 2024, which has continued into 2025. Antimony has taken centre stage following China's decision to impose export controls in August 2024, culminating in a complete export ban to the US in December. These restrictions have driven antimony into the spotlight for investors, as there has been an increased focus for listed companies to accelerate exploration and development activity at their antimony projects. And who would have thought 12 months ago we would be having an antimony focused webinar with such strong interest? The antimony price has escalated from under $10,000 a tonne in late 2023 to nearly $50,000 a tonne within just 14 months. Today we will hear presentations from 6 ASX-listed companies at various stages of their mining journey, each with projects featuring antimony. Each presentation will run for 15 minutes, and as time permits, there will be an opportunity for Q&A. Attendees can submit questions via the Q&A box at the bottom of your screen. But first, to set the scene, it's with great pleasure that I can introduce Carlos Crowley-Vazquez, the Senior Resources Analyst from Blue Ocean Equities. Carlos has a joint degree in engineering and economics and is a high conviction broker. He recently published a macro research note on antimony, and he will provide an update for us today. Thanks for joining us, Carlos, and I'm just going to share my screen.
Yeah, thanks, Andrew. So yeah, just while we get the screen, there's a screen, there's a presentation. I guess we're covering some of the companies that are going to be presenting after us, so including Southern Cross Gold Consolidated and Larvotto Resources, and we've been doing work in some of the others, including Lode, just by way of disclaimer. So from that perspective, I guess we've been looking at the antimony thematic for a long period of time. Can you move the slide? Please, Andrew, into the table.
Have you got access there, Carlos?
Okay, there we go. So we were getting a lot of questions in terms of this thematic. So I guess that's a background of producing the macro note on antimony. So it's a minor metal, so it's not that well known. And I guess from the perspective of most ASX listed companies that have exposure to antimony, these deposits tend to be intrusive related vein systems. So the companies are trying to develop either gold or silver or some other metal as a primary metal to be produced, but they have some antimony associated with mineralization. And from that perspective, I guess it shouldn't be lost on the attendees to this webinar that some of these companies have been the best performers on the ASX over the last period of time. And I guess this chart basically gives you a bit of insight on why, if you look at last year, gold prices moved up nearly 30%, while some of the antimony benchmarks, can you go back, please, have gone up nearly 300%. So that's a very, very strong performance, nearly 1 order of magnitude. So what does that mean in terms of, I guess, some of these projects? So I've included a chart at the bottom left side of this slide, which basically points to, I guess, what 1% of antimony in terms of 90% recoveries and 65% payabilities means for some of these projects. At around $20,000 per tonne, that 1% is basically 1.5 grams per tonne. So that I guess that byproduct brings some strong margins into the project. But if we look at spot, which is basically around $50,000 per tonne US, in some of the, I guess, ex-China benchmarks, you're really looking at 3.5 grams per tonne. So that's I guess, a good grade for a gold project. If you think in terms of most of the Western Australian gold projects, they're usually between 1% and 2%. So this I guess, significant enhancement to the project economics. And then we're starting to see and hear from other, I guess, investors the case for $100,000 per ton US antimony. So that really transforms what is an important byproduct into, I guess, a very, very attractive project. So that becomes 7 grams per ton gold equivalent. So that's, I guess, a very robust project on its own right. In terms of the price action, if we, as Andrew mentioned, go back around this time last year, the price benchmarks were already high by historic standards, and that's been driven by China. And we'll talk about this a bit later in some of the other slides. But yeah, the market was very tight, and China had been relying to supplement its own production from other countries. And then there's the dislocation with Russia, driven by sanctions following the invasion of Ukraine. So around April, we saw a step change in prices through that, I guess, a very strong dislocation of supply and demand dynamics. As Andrew mentioned, then China basically imposed restrictions on exports and culminated with outright bans into the US for exports. So that's the outcome of that has been really a dislocation of supply chains and a bifurcation of prices. It's very clear that anyone that can sell concentrate or products into the US or into Europe is going to be attracting a much higher price compared to what China is paying. So if we move into the next slide, please, we can see, I guess, a bit of what's driving this dynamic, right? Most of the antimony deposits are located either in China. There's obviously some in Bolivia. You can see there Russia with, I guess, Olympiada, which is one of the largest gold mines, but has become an important swing producer in terms of antimony. Tajikistan becoming, I guess, an important producer, but yeah, many of these countries are not necessarily aligned with Western interests, particularly US defense interests. So there's some production coming out of Turkey going into Europe, but Australia still there has become less relevant, but I think that's just about to change. The chart at the bottom basically illustrates the decline in production from China. So that's been driven by consolidation in the industry. So there were too many producers. There were a few issues with environmental treatment on some of these mines, and obviously resource depletion as well as declining rates. So China has dropped from around 75% market share of production to 40%. Russia, particularly 2018-19, became more relevant with Olympiada, but that has moved around quite a bit. Last year, Olympiada really decreased antimony production, so they're kind of focusing on some of the gold zones rather than the antimony, so that has had an impact on the market. That has lack or decline has been picked up by Myanmar, but most of that product has gone into China. Tajikistan, again, becoming a consistent supplier. Most of that product, especially Chinese-owned mines, is going into China. Australia really, I guess, very marginally producing there with Costerfield in Victoria, and some of the other producers, mainly Bolivia and Turkey. So it's not only a mine production story, it's also about processing. China has around 80% of the processing capacity, both pyrometallurgically and hydrometallurgically. So that's I guess, a key strength that China has developed over the last few years. But there's also capacity outside of China, including in Vietnam. India, there's been, I guess, smelters developed in the Middle East, some in Europe and Mexico, and a very strong push, given what happened last year, into getting some of these mothballed processing facilities back online. If we move into the next slide, please, we can see, I guess, what happens with antimony and the key demand drivers. So antimony is a minor metal. It has some qualities of metals, but it's not necessarily malleable. So it's very hard and it's brittle. So it's an ideal alloy for some other metals. It's not a very good conductor of heat or electricity. So that's, I guess, driving its main applications. So the ore that's produced from the mine is usually converted into a concentrate. That concentrate could be traded. There's some low value applications that basically use that, but most antimony is converted into metal. And that metal could be used as an alloy, so very good alloy for lead going into batteries, and as well as military applications, particularly munitions. So that segment of the market has been very important recently with 2 active wars in the Middle East and in Ukraine. The other, I guess, supply chain is antimony going into oxides, so mainly industrial applications. Again, for pigments, fire retardants has been a very important sector of the market, and the key growth driver has been antimony going into clarifying agents, and that's mainly solar panels. So with antimony in, I guess, being applied in solar panels, it increases the efficiency, and that's very important for solar panels, which are not very efficient on their own right. So if you think about China having a cost advantage in terms of production of solar panels, having control of this supply chain, basically producing low-priced solar panels and more efficient solar panels compared to the rest of the world, that's, I guess, a key driver of the whole dynamic. China not only produces solar panels for export, they consume quite a lot. Their market share is around 80% of solar panel production, but you can see the, I guess, the maths in terms of how much antimony is expected to go into this market. So there's open commentary publicly available from some of the key executives of some of the Chinese largest mines, Twinkling Star, for example, that he's talking about 50,000 tons per annum of antimony. So the maths are each solar glass contains between 0.2 and 0.3% of antimony, and the weight of that glass is 16 kilos, so around 40 grams per module. Last year, installed capacity grew by 400 gigawatts. So that's, I guess, a very strong growth driver. To generate 1 gigawatt of energy, you need 3.1 million solar panels. So it's 400 gigawatts by 3.1 million solar panels, 40 grams. That's pretty much the number that we hear quoting around a lot. So that's, if you compare that to what has been produced in terms of primary production, it's nearly half of the mine production. So very important growth driver. And even if you believe that the growth in solar panel installations is going to drop off in the near future, yeah, it's mainly being driven by China. We see that China last year consumed 60% of that, I guess, proportion. So yeah, it's still a very China-centric story, but very important for the rest of the world as well. In terms of military applications, has been front of mind given the 2 recent wars. And what we've seen is basically the US and NATO supporting Ukraine, so getting through a lot of their stockpiles of munitions. So there's going to be even if we believe that those wars are going to end tomorrow, there's going to be a need to replace all those stockpiles. So we see antimony for those applications remaining strong for the foreseeable future. Now, moving into the next slide, what we did was basically do a very simple demand-supply balance model. A lot of this information is publicly available. The US Geological Service provides a lot of information on mine supply. And that basically tells the story of the last 10 years of, I guess, what has happened in China. There's been a little bit of oversupply through some years, and they built up a stockpile, which we think it's being consumed by now. And then 2018, polyhouse coming online, COVID having some, I guess, issues with mine supply, demand dropping a bit, but then demand picking up, mainly driven by solar panels. In terms of the very strong price environment, we've had it for a while. We are not aware of any material greenfield projects, so we only see brownfield mines coming back on live. Larvotto's Hillgrove is the obvious one of the nearest term producers with material resources there. So there's, I guess, potential for supply to increase that way. Stibnite project in the US, probably 2026, 27 more likely. important for the US, but that demand supply balance, we just don't see it closing anytime soon. So what that means is basically we're expecting a strong price environment over the near future. And then the last slide, I just have I guess, a cross section of some of the products with some of these companies. So Southern Cross Gold, just for I guess a better understanding on the mineralization, they're seeing the higher grade antimony near surface, so to a 600-meter depth, then a transition zone and the Bonanza gold grades at depth. Similar to what I guess Hillgrove, Larvotto has at Hillgrove, high-grade antimony at surface. They're finding a bit more, but then yeah, the deeper some of the deeper zones, it's mainly high-grade gold. With Lode Resources, Magwood, historically very high-grade, but hasn't had any modern exploration, and Montezuma as well needs a bit more deeper drilling. So I'll stop there, Andrew, in case there's time for questions.
Thanks, Carlos. Fantastic presentation. Lots of in-depth knowledge there to sort of take on board as well. Obviously, antimony has been a certain market where information has been hard to find. So just a reminder, if anyone's got any questions, they can use the Q&A box that is in the bottom of your screen. Probably one question that's just come through is, which project has the most advanced stage close to production?
Well, I think, I mean, Larvotto's Hillgrove historically was a producer. It's worked as a concentrator in the past. They're about to complete a feasibility study, and because they have access to the ore and the plant there, which is looking at being expanded, it's potentially the one that we see as the next producer. There's I guess other brownfield restarts, but I think they're not as advanced as Hillgrove. So we're I guess in terms of capturing the upside of this high price environment, we're looking for near-term producers or obviously a tier 1 deposits that can basically fill in the gap of some of the depleting mines in some other parts of the world.
Another question, Carlos, is antimony recyclable? Like, can you?
Yeah, so it's recyclable in its from batteries. So there's a lot of recycling from lead batteries. So that's an important, I guess, secondary source of production. The issue with I guess solar panels is that it's not very easy to recover. So most solar panels I guess tend to last between 15 and 20 years. But yeah, I think there's an issue in terms of recovering antimony from there. From munitions, it's also, I guess, quite hard to get any material recycling. So most of that antimony is spent. But yeah, it's mainly lead batteries.
Excellent. And is there a substitute for antimony?
Yeah, I mean, some of the industrial applications, fire retardants, they've tried to find alternatives. There are alternatives, but not as good. Yeah, depending on the price point, yeah, there's potentially some substitution there, but in some of the other applications, as I guess it's hard to find a true substitute.
Excellent. Well, thanks, Carlos, very much for sharing your knowledge and insights into the antimony market today.
Yep, you're welcome.
So we'll go into the next presentation, and just as we're waiting, just a reminder, there will be recording made available of this webinar on the NWR Communications website, YouTube channel, following completion of the webinar. It's time now for our second presentation. Managing Director Ron Heeks from Larvotto Resources. Larvotto obviously got a couple of mentions there from Carlos, and I'll hand over to Ron. I'll just give you control there, Ron.
Thank you, Andrew. Thanks for everybody for joining and the opportunity to speak today. My name's Ron Heeks, Managing Director of Larvotto Resources. primarily talking about our Hillgrove asset today. This is a project that we acquired some 14 months ago and has been living the dream ever since, really. We were pretty positive about the upside on gold and also antimony, but it's fair to say that both have exceeded our expectations. Hillgrove will supply 7% of the world's antimony by this time next year, all things being equal. It's the largest resource and reserve in Australia, and it's about the 8th largest in the world. So it's a world significant deposit. It's the nearest term producer in the world, and nobody else will come on within a few years, arguably longer. It's got a proven metallurgy. It's all been done here before, and we have $2 million worth of capital in place, including 15 kilometres of underground development and a processing plant that has done it all before. If we have a look at corporately, the company, Hillgrove, Armidale, New South Wales, great location, 20 kilometres out of a major regional centre. This won't be a FIFO operation. Most of our people will be based in town. So it's a great place. We've got a few other projects around which are more grassroots as well. Corporately, 400 million odd shares out, current market cap circa 350, share price in the 80s. It's been a pretty good growth model since we acquired the asset, and the world has come to know antimony and that shortfall that exists there. Board and management, most of us have done this before. We've got a very good mix of grumpy old men and seasoned professionals to help us build this project. The team is still being built up on site, and both in the Perth office and out on site, but we've got a very, very good core of people with a huge amount of experience in doing what we have to do. Reviewing the project again, at current gold and antimony prices, the NPV is about 800 million post-tax. The payback is an incredible sort of 7 months, arguably a bit less than that. We need to build this project, and we only require 75 million Australian to do that because the amount of development that's already been put into this project. The maiden ore reserve, 600,000 ounces, and that sits within a mineral resource of 1.7 million ounces at 7. Most of the numbers we quote are gold equivalent. We mine gold and antimony at the same time. We process both, so we do tend to focus on gold equivalents. Deeper in the field, as a lot of these deposits are, you tend to get higher gold grades, and our initial exploration holes when we first acquired the project have demonstrated that with the best hit of 31 metres at 2 ounces, which is a pretty exceptional hit. Our exploration target is about another 1 million ounces at about 8 grams equivalent, and that exploration target sits directly below the current resources and reserves, and we'll have a look at that later, but we don't think that we're gilding the lily with that. It's really quite confined, and there's a huge amount of further upside within the mineral field, as hopefully we can display shortly. We're dealing with record commodity prices, both gold and antimony. I was actually sitting with our off-takers last week, and they were selling antimony at the time at over $50,000 US. In fact, while we're having lunch. So it's a very, very strong market. Record prices in both commodities. There is real no better time to bring on a gold antimony project in the history of mining, to be quite honest. We have a processing plant on site. It has done everything before. It has produced antimony concentrate, it has produced a gold concentrate, and it has produced gold doré from the free gold component. Our initial reserve, 600,000 ounces. That's only included in the ore bodies that we will be mining in the near term. We will expand on that over the coming months as we apply economics to the remainder of the resource. So we look forward to seeing that initial reserve move upwards from that resource of 1.7 million ounces there. And we currently have 3 drill rigs on site, building to 5 in the near future. And we look forward to getting into that exploration target and converting some of that forward into measured and indicated as we go forward. The plant, to give people a feel, a lot of infrastructure in place here. We will be doubling the size of this plant. It's currently a 250,000 tonne per annum facility. We will be taking it to 500,000. That's actually an incredibly easy process. It's about a $30 million cost, which gives you a feel for there's not much to be done there. Half of that is actually in new equipment. A secondary crusher is the primary driver of this. That pretty well gets there in the one spot. Our DFS is underway as we speak. We've just about finalised what's required on the plant, and we've actually been quite surprised that a lot of the things that we thought we would have to expand, we don't. The capacity is already there. So we look forward to that information coming out shortly, but a relatively easy job and only a $30 million spend to move this forward. The remainder of the 75 million to bring the project into production is actually pre-capital mine development. So actually mining and building up stockpiles, not the risk of getting into the ore body. We can already do that, and working on the plant. So most of the money that we need to move forward, or more than half of it, is actually just building stockpiles. If we have a look at our PFS, it's a bit unique, this project, that our PFS is very similar to what our DFS is going to look like. That's because the ore body's there. There's 15 kilometres of underground development in place. If you go to our website, you can see the local Channel 7 news crew driving around within the ore body. It's a very easy to access, very dry mine. It's in great condition. So not much difference expected really between the PFS and the DFS, except that pricing will be tightened up. At current spot prices, the NPVs and IRRs are really quite amazing. We'll put out close to $1.7 billion in the first 7 years, which is exceptional for the scale of the operation, which gives you a feel for some of the economics. Payback, very short period. And that's still running at quite conservative prices on the spot numbers compared to what we're seeing at the moment. So it only just keeps on getting better. It really is quite a unique project as it stands at the moment. And we're targeting first ore by this time next year. We've completed our plant upgrade study. The pre-feasibility is complete. The metallurgy is in its final stages of being put together. As I say, this plant has done everything before. It has produced an antimony concentrate that was sold offshore. It has produced a gold concentrate that was sold to Glencore and Mount Isa. It has produced gold doré. The definitive feasibility study is nearly finished. It's targeting Q1. Project finance is well advanced. We've got some of the world leading project financiers talking to us at the moment, and that's progressing very well. And again, because our PFS is so similar to the DFS, they are able to engage a lot earlier than normal, so that we can cut down some of the time that's normally spent reviewing projects before the final investment decision is made. We look forward to commencing mining. The current plan is that financing everything is tied up by mid-year. There's about a 4 or 5 month build process to double the capacity of the plant. When that commences, underground mining will commence at the same time, so that we've got 6 months of ore stockpile built up on surface, ready to go. So the project is coming along rapidly as we speak, and we're building mine crews and everything also as we speak, as well as undertaking that extensive exploration program of having 5 rigs on site to demonstrate the upside of the area. We've signed an offtake with Wogan, the world's largest antimony trader. That was a prepay contract, so that was good for us on many fronts. It put money into the bank, and we have about 40 million in the bank at the moment, so it helped add to that. But it's also associated us with the world's leading offtake experts, and we look forward to getting the best prices available because of that. We're in a pretty strong financial position to move the project forward. As I said, the DFS expected Q1. You can see the photo there. the ore body underground. As you can see, it's quite dry. It's ready to go in areas. So we've got about the best part of 12 months mine supply underground ready under development. So it's a relatively easy task to get into that. There's a little bit of rehab and some remeshing and a few other things we need to do to get into some of the areas, but realistically quite simple. Exploration potential of the area, really quite huge. If you have a look at the red stripes there, that's where our current resource and reserves sit. We're open at depth on all of the ore bodies and ore zones that we're looking at. We will be starting mining at the number 2 area there, the Mets mining hub. That's where the decline is in place. Multiple other zones to go, both depth potential and a long strike. There's probably more than 20 kilometres of long strike potential if you combine all these zones. As is typical with some of these ore bodies, you get much higher antimony near surface, and there hasn't been a huge amount of near surface exploration done because it was difficult for the old timers to extract gold out of it. So it's an area that has a huge amount of potential. Our Clark's Gully project demonstrates that, where we have extremely wide, high-grade gold equivalent hits and a small reserve there at the moment. We've just completed a drill program to enhance that, and we can see that coming along strike as well. So a lot of near surface antimony gold exploration, but also a lot of deeper, higher grade gold exploration to go as well. So this is a large multi-million ounce field, and we hope to demonstrate that with the aggressive exploration, which is what we've recently raised money to do. Our exploration targets, they're highlighted in red. They sit directly below our current ore bodies and only extrapolated down as far as the deepest areas in the field. So realistically, we're still at the top of this mineralisation, and it should go down a lot deeper, and you see that will be demonstrated by some of the other speakers, that these zones tend to go a lot deeper. Our exploration target at the moment really quite constrained and only limited to a couple of the ore zones. So there's a huge amount more that can be added to these as we bring these new areas on. Talking about some of the hits previously, we'd mentioned that 31 at 6.5 at Clark's Gully. Some other wonderful hits, 22 at 9 grams equivalent, 7 metres at 22. Wonderful hits in there, and Garibaldi area also got some wonderful tonnes and grade. We're looking forward to tying all this up with the new exploration coming through and tying this into the DFS, which, as I say, will be out shortly. So huge amount of upside potential within the project area, even though it's been mined for the last 100 years. And I suppose the key takeaways at the end of the day, the largest antimony project in Australia, it makes it a world-class deposit. We're the only one that can bring on antimony to supply the massive shortfall in the world at the moment, and we will supply 7% of the world's antimony, which is quite exceptional for any single deposit. We've got both high-grade gold and high-grade antimony. We mine both at once. The process plant has done everything that we're asking it to do before, so nothing new there, not expecting any metallurgical issues. We're doing this at all-time record prices. The DFS is out shortly, and we will be mining this and producing by this time next year. And this is really only the start of the upside to the field, and we hope to demonstrate that in the coming months. And that's us. Thanks for the opportunity. Love to answer any questions.
Excellent. Thanks, Ron. There are a couple of questions just in regards to drilling. When can we expect the next drill results, and where might they be from? Which zone?
We're drilling about 3 areas at the moment. So largely deeper holes. The 2 rigs that we've got coming on will be drilling from underground. The problem with 600 metre deep holes is it takes a while to drill them and get them done and assayed and everything else. We'll start feeding those results out in the near term, hopefully. One of the first couple of holes were into Clark's Gully. We've also already released a couple of results from that one. More holes will come through as they're processed, and it should be a steady flow, hopefully, as the rigs all gear up and the program progresses. But yeah, deeper holes take a bit longer to start the flow of information, but it should start coming through very shortly.
Ron, you did mention that you were having dinner with the Wogan guys, the off-takers. They'd sold for $50,000 a tonne. Do they have a bit of an outlook as to where the antimony price might go?
Yeah, they certainly do. You know, they don't see any reason why it's going to go backwards in the near term, because there is no new production coming on. Solar panel usage is what's driving it. There is a massive amount of restocking, both NATO and US military, that has to happen because of what's been going on in Ukraine and the amount of antimony that gets used in military lead, and most military lead has a couple of % antimony in it. So there's a big usage coming through here. Obviously, China has stopped putting it out there because they're using it all within solar panels. And I suppose the interesting thing when you talk about replacement of antimony is that the amount of antimony in each thing that is made from it is actually really quite small. Solar panel, for example, you know, there's a few dollars worth, it's 40 grams worth. It's just that the numbers are so huge, much in the same as the military applications and some of the fire retardant applications. There's not much used. So if the price goes incredibly high, it doesn't actually make a lot of difference to the end value of the product. And you know, this is very different from lithium, say, where if the lithium price doubles, the cost of an electric car becomes nearly unaffordable. If the cost of antimony in a lead acid battery goes up a couple of dollars, instead of being a $200 battery, it's a $205 battery. It's not that critical. So there's not a huge rush to replace it at the moment. You know, we see that shortfall being there. And there's also some very strong geological reasons why there's not a lot of new stuff coming on. A lot of these deposits, as ours, the antimony is higher grade near the surface. The deposits in China and the various stands have been mined for many, many years. They're starting to deplete that, which is why world production has fallen from about 120,000 tonnes back to 80,000 tonnes, because these deposits are just depleting. So there's strong geological reasons why new feed won't come on, and there's very strong reasons why more of it is needed. And I think the one thing we all agree is solar panel usage isn't going to go backwards. And certainly the military uses have got a huge amount of catch up. So it's looking very robust, and that's their opinion for the next 5+ years.
Yeah, great. Well, thanks for the presentation today, Ron. That's all the time we've got. As we let Ron go and we introduce our new presenter, just a reminder that if you do have any further questions after the webinar, you certainly can approach the contact details that you've seen, awillis@nwrcommunications.com.au, or reaching out to the company directly as well. So on to our next presentation. Jonathan King, he is the Chief Geologist of Trigg Minerals, which is focused on the exploration and development of ultra high-grade antimony projects in New South Wales. I'm sure you will realise why Jonathan is presenting the Trigg story straight after Larvotto's. Welcome, Jonathan. I'll hand it over to you, and I'll let you have control of the slides.
Okay, thank you very much. Well, good morning, everyone. Thanks for coming along. When this thing switches over, which it hasn't on my screen at this point in time, Andrew.
Well, I can help drive it.
Okay, you drive it if you like. There we are. Okay, we'll just click to the next one if we can. Thanks, Andrew. And I'll just see. Okay, the obvious disclaimer. Everyone can read that in their own time. And if you could hit the next one, please. Okay, so this talk is very much going to be focused around the exploration process for antimony. We're really going to concentrate mostly on our Wildcattle Creek deposit, which sits within our Achilles project. But I guess the key thing about Trigg at this point in time is that we've managed to pull together this high grade, we think strategically significant portfolio, which has clear upside potential. And coming into Wildcattle Creek, really, we've got a high grade antimony resource there, which is sitting at 1.97% for about 30,000 tonne. And as you'll see, and much like Ron was just saying, this thing is very much concentrated in the surface at this point in time, and we've got a lot of potential both along strike and at depth. We also have untapped tungsten potential. We know that the tungsten numbers are high, and of course with the Chinese closing down that door on tungsten exports, we could see a replication in the tungsten price as per what we see in the antimony price. We are sitting on a gold system, so it's not just an antimony system, it really is an antimony tungsten gold system, and I'll go through that shortly. But really, it's just a very exciting opportunity for us. The key projects coming from the right is Achilles, moving down to the Taylor's Arm area, and then you can see our Spartan, which sits alongside Hillgrove. So we're right next to Larvotto, and then we've picked up some peripheral tenements, excuse me, which are just really in the pipeline for exploration, and we'll see what comes in due course. Next slide, please, Andrew. There we are. Okay, coming into the Achilles project, we completed a resource re-estimation back in December last year. We literally doubled the resource, and we are now standing at 1.52 million tonnes at 1.97% for about 29.9 kilotonnes of contained antimony. That deposit sits within the Bealsdown Fault, which is a 6 kilometre long structure, which is captured by the tenement. And we know that there are high-grade antimony numbers along the length of that structure. And much of that at this point in time is basically unexplored. So it's wide open. Let's come down to the next slide, please. A quick look at Wildcattle Creek from the 2024 MRE. And what you'll note very quickly is that we see that the deposit is open to the west, and it's open down dip. And as I said, this thing is sitting on a gold system, and we've got drill indication supporting that, the presence of that gold system, but at this point it remains dramatically under-drilled. The deposit is expressed at surface for about 300 metres, and then it extends potentially down plunge, because we're not really sure if that is a down plunge component, for a further 350 metres. At this stage, it's drilled to 200 metres vertically. And if you have a look at the diagrams on the left here, you can gather that the widths in this ore body are quite substantial. If we discuss typical antimony deposits in the near surface, they are 1 to 3 metres up to about 5 metres wide. And they're probably averaging about 3 metres. We average 20 metres wide. So we've got a very, I guess, thick ore body, and it has the potential to be much thicker. And if we go to the next slide, what you see here, when we look at the diagram on the right, is that we have a high-grade core, which is running at about 2%. And then that is enclosed within a two-phase alteration system. There are the immediately enveloping stockwork veins, which comprise of antimony and tungsten. And then there is an outer halo of stibnite or antimony, which is substantially broader. So as I said, the existing resource right now encapsulates the high-grade core and much of this stockwork system. And in that stockwork system, we've also got high-grade tungsten at over 1% in value in places, which makes it very, very rich. The stockwork system including the high-grade core, averages 36 metres in width, but the ore body is only 20 metres of that. With the rosettes, we're out to 74 metres wide. And of course, as the price rises, there is the potential that we may be able to capture all of the stockwork system and potentially parts of the stibnite rosettes in the outer alteration halo, which could mean that potentially we are seeing a mining width up to 50 metres wide. Now, in an antimony deposit, as far as I'm aware, that is unheard of. Now, drilling at this point in time is very much concentrated, as I said, in this upper antimony zone, but there is a gold system underlying that. So when we get on ground and we start our first phase of drilling, it will have two purposes. One will be to obviously extend the mineralization or the resource at depth and along strike, particularly to the west. And the other will be to test the gold mineralization that underlies this system. The side benefit will be, of course, that we will start to add a lot more tungsten into the resource, and we expect both tungsten and gold to provide substantial credits to the Wild Cattle Creek resource upon further work. Next slide, please. That's just a quick look at the model at this point in time. So really the objective will be to convert most of that blue into green, moving it into indicated, and then obviously expanding to establish a much broader blue zone. The table on the left, you can see the SRK 2013 resource numbers, and then underneath that, you can see the Trigg resource numbers. So we've effectively doubled the resource just by removing some of the constraints that SRK had put in place on the earlier modelling. Next diagram, please. If we look at Wild Cattle Creek in the regional picture, as I said earlier, we know that there is substantial antimony occurring along the length of the Bealsdown Fault, and we actually do see there being replications of the Wild Cattle Creek system. And there is one particular spot to the immediate east, it's known as Jezebel. There's currently 3 holes into Jezebel, and one of them has produced 1.3 metres at 11.8% antimony. So that represents an obvious target. And when we've studied the geochemistry, we see that it is analogous to Wild Cattle Creek. So we see that as one replica. And then obviously we'll move back to the west and we'll continue to step out in that direction. But we see Graham and Navins as a potential third, and then Fletcher's Mine as a potential fourth opportunity within this project at this point in time. I guess our more immediate work was just that we focused on some regional studies to see what would drop out. We did some sniffing. We applied some gas technology. We can see mercury in gas vapor, which is released from the weathering rocks. And if we see mercury, then essentially we're seeing potential stibnite mineralization. And that opens up a series of subparallel structures to the Bealsdown, which lie mainly in the north of the project. So we will be stepping out there to do some reconnaissance work, and we will see what comes. Next slide, please. Before I jump into Taylor's Arm, really just want to make an analogy here. On the left-hand side, you are looking at Hillgrove, and our projects, the Spartan projects, lie just to the west, and you can see them in the blue. Coming across to the right, this is our Taylor's Arm project. I guess the point I'm trying to make here is that, as Ron spoke, there's a number of mining centres there where the mineralisation is consolidated within particular structures. And there's about 6 in total, which comprise the Hillgrove operations, as far as I'm aware. And what we see when we look at Taylor's Arm is really much the same thing. We have about 6 individual mining centres here. We've got a number of historical mines. The grades across these mines is anywhere from 25 to over 50%. And in one particular spot, until recently, I thought was the highest grade antimony result in Australia, which stood at 63%. Unfortunately, I've now learned of one that has beaten that, but anyway, that's another story for another time. But we can see that mineralisation is concentrating in certain zones. And our job when we come into exploration in this project is really to try and understand these zones, map them out, use geophysics, use whatever we can to really expand upon these, link them up, and potentially produce a hill grove out of this operation. If we can move to the next one, please. So this is just in more detail. You can see the 63% rock chip top that I was talking about. And then you can see a number of grades across this area. You've got the Munga Creek mine, which was in operation in the 1970s, Neil and Taylor's, which was in operation in the 1970s. Little Purgatory mine was in operation in the 1970s. Tester's mine was also in operation in the 1970s. So, you know, there is economic grade present, but as again, with what Ron was saying, what we see here is antimony with gold, and we know that the gold grade tends to increase from south to north. So we started around 6 grams per tonne down towards Real McKay mine, and as we move north towards the Keys mine, we're getting grades up over 24 grams per tonne in association with the antimony. Across to the east here, we have the Toowoomba silver mine, where there was an amazing sample taken, a bulk sample of 23 tonne, and they pulled out an average grade of over 4,000 ounces, 4,000 grams per tonne. So a stunning result, but that is quite a different style of mineralisation on that eastern end, but that requires some due consideration and just adds further value into this Taylor's Arm project. If we could just go down to Spartan, please. And really, this is the last one I want to discuss today, and it will only be discussed very briefly. Hillgrove on our right there. And really what we see is a potential analogue where we're sitting on one of the bounding structures, the Hillgrove Fault. We're sitting in the same granite that hosts Hillgrove or contributes to Hillgrove. And if we look up at Rockvale to the northeast, then we're really in quite a similar scenario. So that's our Spartan project. And as we're sitting in the same rocks on one of the same bounding structures, we hope that there will be similar potential in due course, which will be established in due course. Let's go to that last one. And I think that's really, we don't really need to worry about that. People can review that in the next, their own time. And then that's it. So thank you, everyone.
Thanks, Jonathan. We do have a few questions that have come through. We've got a couple of minutes to answer them. Can you just elaborate on the land access negotiations at Wild Cattle Creek?
Yeah, sure. Obviously, you know, land access in New South Wales can be quite difficult at times. Our team has been very, very busy in the background, basically looking to provide access across the Achilles project and across the Taylor's Arm project. And we're pretty confident at this point in time that we'll have access near term.
And following on from that, is there a timeline when Trigg expects to be able to start drilling?
Well, we need that access in order to drill. So once we have the access, then we've already got our drilling programs prepared. We know where we want to drill, the number of meters, where the holes will be positioned, etc. So once we've got access, we'll lodge the paperwork. At that point, it's about a 3-month process in New South Wales to get turnaround. Once that agreement is signed for access, we've got a 3-month timeline, and then we'll be drilling.
And just a final question, have any offtake agreement discussions begun, started, commenced, you know, moving through the process?
Yeah, we've been approached. I think at this point in time, the board has certainly taken the view that it might be a little bit early. Ron was correct when he spoke of timelines. You know, we are still some time away. We've still got another round or two of drilling to do before we really start to settle on mine studies at Wild Cattle Creek. And hopefully by that stage, we've got something else building up on the Achilles project or Taylor's Arm. So we have been approached, but at this point in time, we think it's a bit premature.
Excellent. Well, Jonathan, appreciate your time today. Thanks for giving us an update on Trigg Mining. We'll say goodbye to Jonathan, and we will bring in our next presenter. Once again, just a reminder that at the end of the webinar, there will be a recording placed onto the NWR Communications YouTube channel as well.
Okay, very good. Thank you, everyone.
So our next presenter, Mark Major, CEO of Krakatoa Resources. Krakatoa have the opportunity to acquire an 80% interest in the Paquita project in Georgia. Mark is an experienced geologist with an MBA, and he is here to tell us more about the project.
Yeah, thanks, Andrew. Yeah, welcome everybody, and thanks for joining today. Hopefully you'll see something here that you like and invest in us. Andrew, I don't have control of the project, so if you want to,
I can run it for you.
Run through. So yep, okay. So yeah, look, I guess you may as well go to the next one. Everybody knows why we're here. So, oh, too far, mate. Yeah, okay, we'll start here. Okay, look, this is really just a quick snapshot of what the company is. You know, we're an ASX-listed company. We've got 590 million shares on issue. Current market cap is 5.3 mil. Enterprise value is around 4 mil. Look, it's very cheap, obviously, right at the moment. Out of, I think, all the people that are speaking today, I think we're probably the lowest market cap company. And I think that's because people don't really understand what we've got. But just going on with the company, we're a three-man board. Colin Locke is a non-exec chairman, Dave Palumbo, Tim Hogan are non-execs, and then myself as a management team, CEO, with enough experience there to be dangerous, I guess. So I think everybody can see, hopefully everybody will be able to see by the end I finish this, there is an opportunity for investment into this company. I'll go to the next slide. Okay, look, this is just really before we jump in, this is a field camp that's out there currently at the Paquita project. You know, we really see this as, you know, there's three main reasons why we believe this is, you know, a massive opportunity for the company. You know, it's got fantastic grade. We've got a very large, substantial database of exploration being undertaken historically, and there's massive blue sky opportunity here as well. Go to the next slide, please. Okay, thank you. Look, I guess why is the Paquita? Simply put, I think there's about 26,000 tonnes of Y, and you top that off with an additional 800,000 plus ounces. It's more like why not to me. So as you can see, we've got a very high grade ore body. You know, the foreign estimates that are being done are over 12% antimony, and there's also one that's been done which is a 3.7 gram per tonne gold. So major resources. Look, we've also got extensive growth potential on the upside. We're located in the gateway of Europe and Asia. You know, demand is increasing in these zones, we know. So we see this as an outcome for us going forward. And again, we've had extensive experience, exploration undertaken on this. And I guess we're not really in exploration here. We're really into a pre-development stage. You know, it's not quite brownfields. We don't have a plant in place, but we're very, very close to sort of that sort of facilities. Okay, next slide, please. Okay, just on the project, look, we're located in the upper regions of Georgia, in the Larvotto area. License is about 1,800 hectares. It's a current exploration and it's a mining license as well. It's long term. The project historically has been explored by the Soviet and some other companies, but I guess what we know is we've got 27 kilometres of underground exploration at it's already in place. So, you know, I listened to what Hillgrove said before, and there's a, you know, they've got less than that in development. So yeah, we're very, very fortunate to have that in place. We've also got an extensive database. So far, we've got 15,000 geochemical samples. There's a lot more coming through. We've also got 2 resource estimates, which I've hinted, and more recently there's been some LiDAR work and IP geophysics, which I'll allude to a bit soon. So as a project, we have the opportunity to acquire up to 80% of this project, which is a major thing, and obviously we'll be looking to aggressively advance the project over our option period, which is a 2-year period all up. Next slide, please. Okay, this slide looks like it's a bit messed up. Anyway, foreign resource, look, all up, it's a high-grade resource. It's a Russian resource that were done. You know, it's 26,000 tonnes as I'm illuminated, 12% antimony, 80,000 plus ounces of gold. And both these were actually done in 2007, 2008 by Eastern Mediterranean Resources, just after they actually decided to go into the Rio Tinto mine in Spain as their primary focus. As you can see, there's a 3D model there. They're the main veins that have been explored. There's 17 in total there, but there's actually over 60 in the whole part. Next slide, please, Andrew. Okay, project geology, very simple here. I won't go right into this, but yeah, we're part of the Caracas thrust belt. You know, it's a very highly prospective area, part of the you know, terrain metallogenic belt. It's a major sort of very fertile belt. It's got a lot of deposits already mined in these areas or in this belt. So we're very fortunate in that. On a local level, obviously, it's a narrow quartz. It's an orogenic narrow quartz, you know, stibnite veins, which are obviously hosted in the carbonaceous shales and slates. But additionally to that, which has been found in more recent times, is been that there is an alteration zone which is very, very gold rich, which is actually into the hanging wall and the footwalls of this system. Next slide, please. So I guess this slide is really the key to where I think we are, and you know what really separates us from our peers. You know, really are the impressive grades that we do have here. You know, it is a narrow vein system, and we do know that the antimony is focused only within that vein system, the quartz antimony vein system. It does carry gold. You know, we believe this project is actually an antimony project with gold credits, but whereas most other projects, as we're starting to see, is they're really gold projects with antimony credits. So, look, we do know there is an extensive gold system here as well, and as you can see, they've got some very high grades. Now, those footwall and hanging wall grades, the actual alteration zone does extend past that. There hasn't been any drilling on this project, so this is all taken from underground inside the adits, and those distances are restricted in what they can actually take. So we believe there's a great extensive, you know, opportunity here, blue sky opportunity really to advance on that. Next slide, please. There's been some metallurgy test work being undertaken in the last 10 years here. Look, what that has really shown us is that by a standard simple flotation and, you know, one cleaning stage, we can get a 56% antimony concentrate. And with that also, it captures a lot of the gold, which comes out into the tails and the actual arsenopyrite rougher con at the end. So it doesn't get associated with the antimony. It's a separate thing, and therefore, obviously, the opportunity lies in that to actually try to extract the gold from these parts, and that will just optimize the whole situation even further. Okay, so other than, you know, I guess unlocking the gold in this system, we've got a lot of other blue sky opportunity. During our initial review, we identified areas which were very open for additional discoveries. You can see in this image here that there's basically the ore or the veins sat into the side of the mountain there, and there's IP geophysics that were undertaken over top of the scree line. And beneath that scree line, we've just put the announcement out on this last week. There's actually conductances, and we do envisage that these are continuations of these high-grade zones, sulfide zones, going between underneath the scree. So there's also areas between the adits. There hasn't been any drilling undertaken here, so we know that there's the opportunity there between those adits. So once we undertake the drilling, we'll start to underside and reveal what's there. And we also know that there's only 17 veins that have actually been explored so far within this system, which is over 60 veins that have been mapped and reported. So there's a huge blue sky for us to start to delve into later into the year. Next slide, please, Andrew. Yeah, look, I guess the development stage, we've just completed a full review of the data. Look, we're now designing the upcoming exploration program for 2025. We do believe, this is the steps that we'll be undertaking. It'll include additional mapping. Obviously, we'll look at undertaking maiden drilling initially as soon as we can, and then obviously continue with the metallurgical work and start revealing what's installed for there. And I guess the whole aim of this is really, during our option period, is to bring this into a JORC compliant mineral resource, and obviously advance to a PEA, PFS level studies to make a decision on the acquisition of this. And then if it's positive, look to fast track it into mining. Next slide, please. Okay, Georgia. Look, not many people are very familiar with Georgia. It's sort of one of those forgotten lands. And just to illuminate everybody, it is a very mining-friendly country. It does have a very well-skilled workforce. It's got developed mine infrastructure. It's run under a European legal framework. And I guess more importantly is that, it does have, strategic trade agreements with its neighbours and also between Europe and Asia. It's got trade agreements with China, Turkey, other CIS countries, the European EFTA, Hong Kong. It's also got other agreements in place with the USA, Canada, Japan. So we're talking about all the markets that we sort of need to feed into as we go forward. Next slide, please. I'll move on. So yeah, look, in summary, just to give you a good idea, I guess we have an option agreement on this. We've got a 2-year period, initial 12 months, and then a 12-month extension and then look to acquire 80% of this project. It is a world-class project. It's got the high grade. It's been well explored already, so we're not starting from scratch. We know it's got simple processing already undertaken, and so it's very amenable to these solutions. And we also know that the infrastructure, from getting this product or products into the port of Poti, where there's already an established, copper and gold concentrate being exported from, is quite viable. Next slide, please. Yeah, look, I guess in summary, we believe this project is well positioned for growth and success. It's very high grade antimony and associated gold resources. It's got extensive mineralisation system, and obviously the expansion potential is massive. It could double, if not even further. So, we look at this as a de-risked sort of development pathway for the company. So it's got all the bones, to be a very successful opportunity for us and our shareholders. And we obviously think that there will be great benefits for the shareholders as they come along the ride for us. And I'll leave it there if you go to the next slide.
Yeah. Excellent. Thanks, Mark. We do have a couple of questions that have come through. And once again, if you do have any questions, just use the Q&A box in the at the bottom of your screen. Mark, are you able to just reiterate, what's the quality of the existing data on the project, and how will you convert it to JORC standards?
Yeah, look, obviously, JORC you need to drill. Okay, it's an understanding. Majority of the data that we do have are from channel samples, which were being taken under, through these exploration adits. When the Soviets undertook the exploration drives back in the 50s, 30s, right through the 50s and up into the 70s, they actually were sampling the face as they were mining, let's say, and they were doing it perpendicular, so they were taking real live samples. After that, there was the current company who's got the ownership of this. They came in and done some other confirmatory samples. They were actually sampling the full face, so not just the antimony vein. They were sampling the other veins, and obviously there was gold associated in that. So look, the quality of the data, the Russian data or the Soviet data is some of the best mapping and data that I've seen. Okay, in its format, and it's all handwritten. It's all beautiful to the finite detail. So we've had SRK on this, and they've gone through and they've worked their magic and been able to pull out this. So we've just completed pretty much a gap analysis on this data.
Finally, Mark, can you just provide a very quick overview why this project is compelling over other antimony projects?
Look, I think where we are with the project, it's not exploration. We're basically making this a JORC. With even half the size of what we've got, we get this into JORC. We've already well advanced into, say, the processing side of things as well. But what I guess the other understanding of this as well is the gold potential here as well, and then there's the blue sky opportunity. So for me, it's a no-brainer. It's got all the hallmarks to be probably one of the biggest deposits in the world, when it comes to antimony.
Excellent, and what a great way to finish your presentation. So thanks very much for your time today, Mark.
Thank you, Andrew. Thank you.
So we'll bring in our next presenter. We're very lucky to have Mike Hudson from Southern Cross Gold. I think he's currently sitting in an airport somewhere overseas, but he absolutely wanted to be here today and present the Southern Cross Gold consolidated story. So, Mike, can you hear us over there?
I got you here, Andrew. I've got you. Can you hear me?
Yes.
Very good. Now, I've shared a screen here, so it will come up in a moment. You've got the PDF version there, so we could just swap that across. Thank you for the invitation to present here. I'm just going to stop the share here, and I'm going to try this again because we look like we may have a technical issue just before we get started. How's that? No?
That works.
No, we got the wrong presentation up there. Guys, just go across to the shared screen that we successfully tested in the warm-up. See, maybe I'm just not seeing it. Okay, I'll get started here. Sunday Creek is one of the more exciting gold and antimony projects in the space. It's just down the road from Melbourne, about 60 kilometres out. We've got lots of rigs operating there at the moment, 6 rigs. It's expanding greatly. You won't see there's such an exploration program on many projects worldwide. We are dual listed now, and I just wanted to point that out. So we are listed on the ASX. Our ticker has changed as SX2 now, was SXG until a few weeks ago. So update your screens, SX2, and we're also listed on the venture as SXGC over there in Canada. And I'm speaking to you from San Francisco. So the disclaimers, which I implore you to read if you're going to make an investment decision. So let's give a few metrics first around the project. In terms of a hit rate, if you look, we've drilled 70 kilometres into this project at the moment. And if you take the 100 gram metre hit rate, which is the grade of the drill hole over the width, so 10 metres at 10 would be 100, etc. If you take that, that's a very good drill hole. Now, we've got 55 of these. Newmont once told me 3 of them in any coherent body was a bona fide discovery for them. So, and if you divide it into the number of drill meters, we're hitting it about every 1,500 meters. So that's a fantastic hit rate. I can't see anything better in a discovery worldwide over the last few years. So that's a great measure in itself. We have 70 veins that I'll run through, and we're finding more all the time. So this is a multi-vein system, very high grade. We'll focus on that. We're only about 5% of the way into the discovery, so lots of room to move, and it's a big system. As I said, lots of rigs, 5 drilling today. The 6th is mobilising to site now, and we'll be drilling next week. And we're in the middle of a 60-kilometre drill program. So lots of continuous news flow. Every few weeks you're seeing news. We've got cash in the bank. We're about the 750 million market cap thereabouts. Sorry, the screen wants to do what it wants to do here. Importantly, we've got over 1,000 hectares, 2,400 acres of freehold ownership. So we bought a lot of properties over the project and beyond to create that buffer. And the projects are 100% owned. Now, you took a few sneaks as the presentation went on there just for a moment. This is a map of the key discoveries that came from Minex Consulting from 2014 to 23. This is Richard Shoddy's work, and he's named all his tier 1 and 2 discoveries over the last 10 years. There's 12 of them, only a few gold projects, and 2 of them do exist down in Victoria. One is ours, of course, Sunday Creek. The other is the very well-known Fosterville, which we're 100 kilometres from. So it's already been benchmarked as a very significant discovery. And over the last year, we've doubled the scale of it, which I'll show you also. So what we have around the market cap, I don't want to dwell on it, and the cash, because we've talked about that. I think one of the key aspects here is just to look at the shareholder base. Over 50% of the shareholders are in 2 groups, if you like. There's a high net worth group that's made up of Pierre Lassonde, who's probably the best known value investor, at least in this part of the world, and other people around him. And then we've got about 24% in institutions, both here in Europe and North America. So we looked at the stats, we looked at how the project sits in Australian terms. Let's just have a look at some of the better intersections, not because I want to read the intersections for you, but just point out some numbers. So here's the downhole length, here's the gold, and there's that SB that we're all here for, the antimony. The antimony overall in this project averages 20% recoverable value. So it is a gold project, 80% with that 20% antimony. And then if you look at all our drill hits, and you can see the very good ones showing up through here, and the grade and the width, you can see our average grades and widths fall in that 1 to 10 metre width. Sort of as we talked about before, our veins is 3 to 4 metres. So very mechanically amenable vein widths we're here in terms of a mechanical mining method. Now, in terms of the project, we mentioned gold is the predominant value. So we just like to say gold will pay for it, and antimony will help permit it. It's wonderful having a gold project with an antimony or a critical metal byproduct that's very real. Metallurgically, we will produce a gravity con for the gold, and then we end up with a gold antimony float product. Half the gold will basically go between each different product there, and more than 80% of our gold is in a free form or a native form. Now, we've got lots of relationships with lots of people around the world. We're members of the Defence Industrial Base Consortium, which is the US Department of Defence, which is basically a pre-vetting group of people who can set themselves up for funding from the DoD. AUKUS, the AUKUS legislation that's well known and understood here in Australia, has put a critical metals piece in there that allows Australian and UK companies to compete on equal terms with the US companies for DoD funding. So we're well placed for that. Now, I just wanted to try and outdo Carlos a little bit about what he didn't talk about antimony, and I was told not to talk too much about the antimony side of the market and talk about the project. Importantly, though, there's a few things here. In Victoria, antimony's always been the second most important metal after gold. So during the European wars in the 1870s, our mine and Costerfield, which is Australia's only producer in our project, were kept open. They were both treated together, and that was by the UK British Munitions Act in World War I. So at every time there was global disturbance, I suppose, antimony came back, and that's a very good reason why we've seen it here, and obviously a great deal to do with the restrictions we're seeing and the minimisation of the supply chains. But one thing I wanted to outdo Carlos on was this point. He certainly didn't mention that use, which is the recyclable laxative potential of antimony. It's probably had its day, but it was something in the day. Before we get into the project, we talked about Victoria. Gold's always been important in Victoria and still is. Got 5 gold mines operating here today. A lot of people think that Victoria is a challenging jurisdiction. The Australian market has missed the last 7 or 8 years, where Fosterville was the highest grade gold mine on earth, the lowest ASIC, and it was a top 10 producer, produced up to 600,000 ounces a year. So Victoria is actually working very well, but it still has that stigma that perhaps the Australian market thinks more so than probably the North American market. So the Victorians, to their credit, the government is getting on with the job, and only in December they came out with a critical metals development strategy. They put in critical metals development zones around antimony and mineral sands. They came out and said, the state is open for business, the Premier. Nice words, but what does that actually mean? Well, they came out and put some very strict timeframes around permitting. The main environmental permit required to permit a mine, the key step, they've limited to 18 months. Now that's pretty much benchmarked on a world global scale. And then 2 days after announcing this strategy, they permitted 2 large mines, which were the first 2 large mines permitted in the last decade, essentially, in Victoria. So the government is very supportive. We do certainly see a window there, and we're working very, very closely with them to align their interests of developing projects that have support from the local people, Indigenous people, the municipality, and bring it to market as quickly as possible. And you can only do that if you've got the support of the government, of course, which is a very important aspect. So the project is 60 kilometres from Melbourne. Here's Fosterville and Costerfield, 60 kilometres to Costerfield and 100 kilometres to Fosterville. We just zoom in on our project. Looking here, we've got a trend of about 12 kilometres. So it is a long trend. We're putting in a lot of work on the regional exploration at the moment. The 70 kilometres has come from that circle here. But the black boxes are where we're doing a lot of IP, mapping soils, and the 6th rig that's coming next week will be dedicated to regional exploration. You never want to leave your exploration too long. Let's just zoom in quickly, because I know time will go very quickly if we get into too much detail. Here's just the core area where we've got 70 kilometres. We're going to go underground, but we're just looking in plan view here. 200-metre scale on that grid. Just for your eyes here, the mineralisation is hosted in a structure that's 100 to 200 metres wide, and that's what extends for 11 kilometres that way and another kilometre or so that way. And then within that structure, the mineralisation is hosted as these vein sets, which I mentioned we had 70. They're in that northwestern direction, and they're the 3 to 4 metre wide on average, the median volume weighted width, but they can get up to 10 meters, as you saw on that graph before. They're up to 100 meters long in this aspect, 20 to 30 meters on average, and they're very extensive in the up and down sense from in and out of the page as you're looking. We can trace any one vein set for over 600 meters. And then looking at going underground now, you can see the vein sets that are just shown here. Some of the grades of gold, sorry about that. Some of the grades of gold here are shown, so we're only looking at everything greater than 10 grams, 300 in the red, green is greater than 10. You can see the old mines. So this too was an old mining area back in the up to World War I, as I mentioned, down to about 200 meters at its deepest level. The yellow holes are those that we've got in the lab, so always lots of news flow coming. So I suppose this is just the slide to show you where we're going and what we've got. So back a year ago now, it's gone very quickly, we put this area, it was an exploration target, absolutely constrained by drilling, but making assumptions between drill holes that weren't close enough to put all of them into a resource. So that was 1 to 1.6 million ounces at 7.2 to 9.7 grams per tonne gold equivalent. Since then, we've drilled lots and lots of very high-grade gold all the way across the field, going down to 700 meters here. I should put these in blue so you can see 700 meters here, extending down beyond the kilometre here, and lots here. So this is basically the area where we've explored into. You can see it's essentially a doubling of the footprint, and you'll see an updated exploration target come out very soon on that. And then if we wanted to get into the bigger picture, that little area where I was just talking about, where it's about 2/3 was drilled out in that yellow, this area is only a very small part of the broader trend. Here's Fosterville at an equivalent scale. We know these systems, Fosterville and Costerfield, go to 2 kilometres. So there's a very good chance this will go to 2 kilometres. And then this is only 10% of that broader trend. Here's the old mines we're drilling under here, and there's the old mines along the trend where we're doing the IP, etc. We have hit gold out there. We've done a few thousand meters and drilled some good gold hits, but there's a hell of a lot more to go. So the optionality in exploration that you're not really paying for, I suppose, but you always want to see in a project, there's room to move. So lots happening, lots of drilling, all that regional work, the exploration target updates that I spoke to, metallurgy, we're going through past those first CIDA tests that showed that there was no red flags with those 2 products that we spoke about. A lot going on behind the scenes here with a lot of baseline work as we're working with the government to do all that background work, and a lot of work going on with local stakeholders, as I've spoken about. So in summary, we certainly won't see many better discoveries in terms of its drill hits. It's already been ranked as one of the key discoveries in Australia in the last decade. It does have that 20% antimony component, so that's very, very important from a critical point of view, and this will be one of the larger Western world deposits. There's no doubt about that, and especially when we come out with the exploration target number 2, you'll see the contained antimony in that area. A lot more to test, so we're growing and growing. A lot of drill holes drilled and a lot more to come with the 6 rigs, and we are going to go and look to increase the rigs all the time on this project. I think this is a very key point to make. We're very much focused on doing the right thing at the right time, raising the right money at the right time to create value per share. It's all very well to create a larger market cap, but we're very focused about doing it on a per share basis, and those supportive shareholders certainly help support that vision. So lots of cash, lots of freehold, lots of drilling, a very exciting discovery, and thank you very much for the opportunity to present.
Thanks, Mike. Really appreciate you finding some time in an international airport to share the Southern Cross Gold story with us. I know when we spoke a couple of weeks ago, we discussed the level of investor interest in the antimony side of your story. As you say, you've got 20% antimony byproduct. What can you just elaborate for all viewers today, just what it is when you're talking to people internationally, that they're most interested in about the antimony?
Well, our aim here is to create a very high margin project. It's with that 7 to 10 gram range that we gave with the exploration target. This will be a very high grade gold deposit. It's not too many gold deposits on Earth that are multi-million ounce potential with such high grade. So that's what everybody loves, and the antimony is a real wild card in terms of just where it may go. Right, it's a very important piece from, I suppose, people's ability to see that it can get support. You know, it's not just going to be a gold project alone. So it does add a lot of dimensions around that. It may lower our cost of capital, doing something clever with an offtake. So that's what they like. When we're not in the financial world, we talk about the antimony 95% of the time with governments, etc. So it's all the other side of the coin there. But I think you asked from an investor point of view, so that's why I answered in that way.
Yeah, absolutely. And just in terms of offtake, where are discussions at with doing some offtake or
yeah. So. Sorry, you just broke up there and my connection dropped out. Yeah, where are we up with offtake discussions? Well, you know, the weakness in the Western world is that we don't have a refinery or smelter, not a refinery, smelter at scale. So Oman shut down. That was a 20,000 tonne smelter, and Carlos briefly referred to that. And then really everything else is very small or not specific for concentrate supply. So we're working with lots of partners. You know, we're up in Japan, we're across here in the US, of course, looking on how, you know, what can this project bring? It can bring offtake, and that's really the secret. You can't build a smelter without offtake, and that's why I'm very excited about the whole southeastern Australia. Right, I don't think we're in competition with anyone. I think there's a huge opportunity for southeastern Australia, especially here, to create that offtake. It's probably the largest non-Chinese Russian resource base and growing resource base, and I think Carlos alluded to that also. So you know, we've got 3 to 5 years to find a solution to that. It's no use playing the critical metals card and then selling it into an area where it gets banned, getting sold back to us, right?
Excellent. Well, as I said, really appreciate your time today, Mike, and have a safe flight home.
Thanks, Andrew. Thanks for the opportunity.
So we've got 2 presentations to go. Just a reminder, we will be putting a recording of this webinar up on the NWR Communications YouTube channel following the completion of the webinar. Jason Beckton is the Executive Director of Lode Resources. He's also currently the Managing Director of Prospect Limited. Lode has completed the acquisition of the Montezuma Antimony project in Tasmania in December 2023. And we'll welcome Jason to tell us more.
Thanks, Sandy. Appreciate it. All right.
You should have slide control.
Yep. I'll just stand by. Always a hard act to follow in Hutto, but here we go.
Did that come through?
I'm still seeing the intro slide for Southern Cross. Here we go. Yep, that's us. Yeah, thank you. So what I'll do is keep it to 15 minutes as per schedule. There's a lot to cover, but the main reason to put this image of the granted mining permit, where we're actively mining within the government contract, is to emphasise that we are a very small company, obviously market cap wise, but we are in fact mining and producing a potential direct shipping ore that we're reviewing at the moment, whether we proceed with that, but also about drilling out the resource reserves in the future. Next slide, please. Or I'll do it. Yep. So disclaimer, it's important to look at that because we will talk about future outcomes that are related to a mining lease. The market cap reflects, as per most juniors, fairly static, but we're certainly differentiating things with both drill results soon and also underground numbers, both in Tasmania principally, but also in New South Wales. Talk about that. Very sticky register. The two principal directors, in Andrew Van Heist, Ted Leschke, control significant stakes, as well as a loyal core group, so a tightly held stock. Okay, so we'll go through the use of funds, which we've raised recently, mainly because investors put in, sorry, just got a short time problem with my seat. Investors put in a significant amount of money based on the metallurgy and mining activity in Tasmania. Magwood is also an antimony project in New South Wales, which we're currently permitting, and also Webb's Console Silver, which I'm looking at, and I think, dark horse in Uralla Gold Project. So I don't expect everyone to remember all these numbers, apart from the fact they're very high grade. That's fine, talking about high grades, but importantly, a lot of these numbers are generated either from drill results or underground bulk sample in the past. When it comes to Montezuma in particular, and I'll take above as read that we're 100% owned, etc. But when it comes to Montezuma, we're seeing not just high-grade antimony, which is the focus of today's talks, but also supporting that is very high-grade silver. I've worked in silver for 30 years and, well, 28 years, and I can tell you that anything above 200 is interesting on the silver side of things, with intercepts over 5 meters. So we're pretty excited about these intercepts, and more will follow. Webb's Console the same, but it's just silver there, and Uralla. We haven't drilled Magwood, the antimony gold brownfields project, and Uralla, which I think is sediment-hosted gold related to an intrusive, which is very interesting, like some of the things to the south, such as McPhillamys. So we'll work on that in due course. It just has to compete internally with Montezuma. The project Montezuma is certainly been well managed in the past by the vendor before we took it on, and importantly they're continuing with the company managing things in Western Tasmania. We've got a consideration which is of course paid, in which exposes them to the upside as well. Going forward, heavy on shares, light on cash, which ensures that they do very well when the company does well in the near-term production environment. And the qualities of the project will go through, that they're manifestly low risk in some regards from the metallurgy point of view, certainly. That's because of metallurgy. If you look at the second or third paragraph, the metallurgy was largely already advanced on the project. There's a permitted plant which needs some upgrading nearby in Granville. And there's also exploration upside, as we see, third point from the bottom. Commenced some good work by EZ, which became Pasmico in the 1980s, defining a large tin anomaly. And then tin's important as a surface anomaly because it's an oxide. It doesn't weather significantly, but it does give clues to the antimony silver system depth. And when I say system, I'd just like to point out that this surface mapping, as per the second last paragraph, is picked up on the fact it's not vein hosted, it's a continuous structure. And that's I think the last point on the left, point 4, that's the key point, that it's a continuous mineralized structure. Because when you get high grades, you always worry about continuity. As a geologist, as a resource and mining geologist, I am skeptical when I see high grades, but after visiting site in January, the heartening thing and the exciting thing was the fact that it's a long strike occupying a structure. It could be normal, could be reverse structure, it doesn't matter. The main thing is continuous, like we see to the north at Rosebery. So talking about projects which are nearby, there's importantly a world-class VMS system at Rosebery. Henty, where I worked in the late 90s when that was commissioned underground. I was an underground geologist there, and importantly, far superior geologist has agreed to join us on the resource and permitting work and exploration work in Tim Callaghan. Montezuma is just to the west, and Renison to the north, and some Zeon systems which are not being mined, nor is Avery being mined further to the southwest. But basically, you've got an active mining terrain with 3 active mines, if you like, to the north and east of Montezuma. So plenty of access to experts and people, as you expect on the west coast. We omitted Mount Lyell to the south. We're just working on that diagram. What I would like to see is consolidation of the tenure in the company. So I look forward to some news on that around the Montezuma project itself in the Mount Reeds, which is the famous belt that hosts most of the long-lived, large-scale systems in Tasmania. But importantly, the thing that attracted me to the transaction that Ted and Andrew, the other directors, drove was the fact you've also got a processing plant that's permitted to the west, as well as a granted mining lease. So it's a bit of a leapfrogging event that the directors have set up. So there's a lot of numbers here, but just take away the key point of extremely, well, not extremely high grade antimony, silver and lead goes to the easy metallurgy apparently. We've got certainly development work that's been done, which is backing that up, and we're legally allowed to extract that material. So there is a few stockpiles actually we're pondering with further studies to differentiate the company and get some production going. And again, I like what the key point I make about grade, etc. Ad nausea is that at least the grade's continuing at roughly the same numbers. So relatively no low nugget effect, which you see with some other gold antimony projects. This is a silver antimony lead project, and it's basically not stratiform, but basically a structurally controlled continuous sulfide zone. So low nugget, which is good for the resource geologists and also the planning engineers. We have development phases, which are, again, I won't bore people with the continual high grade narrative. We are working on the metallurgy because we don't want to be complacent about that, and there's certain legal requirements before we do feasibility studies, etc. in the future post resource. And that again was work that had already been advanced by the vendor. That's why we're already at this point. The diamond drilling program is the next news flow for shareholders. It will be a starburst pattern from the side, and we've checked out all the pads recently. Subvertical system, so access is flexible, and we have LiDAR showing us where to clear the tracks. So I'm heartened actually working in New South Wales, comparing it. Tasmania is far more, frankly, far more commercial in terms of drill permitting and also monitoring. So that's a positive for Tasmania. And it's fairly busy, but the yellow numbers, the antimony, which is the focus of today's talk in a Pierce point, this is a vertical slice through the system, simplified somewhat, but it gives you an idea that the grade's continuing at depth. It's not some sort of high-grade potted surface that will peter out. We have strong conviction that these grades, and of course there'll be variation, but the grades will continue when we drill out the rest of the strike in the coming weeks. Shouldn't say the rest of the strike, but the assigned strike of about 500 metres in the coming weeks and month. I'm going to have to wrap it up, I believe. How are we going for time? But I think we're okay.
You've got a little bit more time, Jason.
All right. So I'm just going to, without going through, because you sort of bombarded with numbers, but basically we can see we've been doing a lot of work on the surface. There's a tiny area that's defined versus the strike to the south, defined again by the tin anomaly. Sorry, that graphically didn't work in PowerPoint. Importantly, every company should have one of these. And this goes to news flow, so you will see thick news flow as an investor or a potential investor. And there's people contacting us, obviously, because of the near-term production concept. I might leave it there with the antimony thematic, Andy, if is that a timely, or did I stop too early?
Well, if you want to just go to your summary slide, there's time for you to do that. So
all right, we'll skip through New South Wales because we haven't got the antimony project permitted there. I do note Larvotto Resources spoke earlier about the Hillgrove mine. We're just to the north of that. And the New England project, we're calling it, Magwood, which is, for want of a better word, littered with projects, and is Magwood antimony mine itself is what I would call as a exploration resource geo a sitting duck. Hasn't been drilled, high grade, again, same theme as Tasmania. So we're repeating the same process as others have done in the past of drilling out brownfields point blank projects. We won't dwell on Webb's silver project, but that'll be an exploration target in due course, which I've got to pull my finger out and complete. Pipes of silver, basically, like we see to our north. And Uralla, as I mentioned, intrusive related gold and bulk information on that. All right, so that's the conclusion slide there, Andy. Basically, you look forward to news flow of drill-related and metallurgy-related in the coming weeks and months. Generally high grade. I'd be surprised if it was otherwise.
Fantastic. Just in terms of the news flow, can you be a little bit more specific? What is ahead, let's say, in the next 3 months?
So the drill program that I flagged for Montezuma would be the next thing. Obviously, we do not release visual results, but we'll see turnovers turnarounds quite fast with the lab in ALS in Burnie. So we should see results with that, I'd say, if drilling's at a few weeks and allow a few more weeks, so maybe 4 weeks before you see some results. The other piece of information that will come out is there's been some trenching and prospecting work going on in the background, so that'll fill that 4-week void for the attention span of the market.
Always important. Do you have your eyes on any further asset acquisitions, any further land surrounding Montezuma? Well, that might be.
Certainly, that's topical because there's companies, and we never judge this, that are focused elsewhere. So yeah, we're certainly looking at since I worked there 28 years ago, it's been pegged out correctly because it's a jewelry box on the West Coast and driven a lot of value. One of the best books ever written out of my old uni, Melbourne Uni, which is The Peaks of Lyell, discuss the amount of wealth that's been built out of Mount Lyell, Renison, etc. There's no limit to the amount of potential there, although it's quite technically difficult to find systems. You look for growth faults, you look for grabens, and to date, MMG's success at Rosebery has been great because they keep finding lenses. So we're hopeful we'll emulate that kind of work, obviously at a far earlier stage.
Excellent. Well, that's probably a great spot to leave it as well. Jason, really appreciate your time today to provide an update on the Montezuma antimony project in Tasmania, and obviously lots of news flow ahead. So thank you and good luck.
And apologies for the furniture fail early on.
So we'll bring in our last presenter for today's webinar, Zach Comer. He is the CEO and Managing Director of Equinox Resources. Equinox is progressing the Altura antimony project located in British Columbia with ultra high-grade antimony assays. Welcome, Zach. You should have slide control now, so I'll hand over to you.
What do I do? Just click the screen? Andrew?
You should be able to just click the screen.
Okay, excellent. Good afternoon, everyone. Thank you for joining us today in this webinar. I'm Zach Comer, Managing Director and CEO of Equinox Resources. And today I'm excited to take you through our Altura antimony project, one of the highest graded antimony deposits in the world. As we know, antimony is a fascinating, highly strategic metal I've just joined the webinar. I'm not sure if this was touched on, but the English word for antimony or antimony derives from the Greek word anti, which means opposed, and monos, which means solitude. And that reflects that antimony is rarely occurs alone in nature, and instead it has a strong affinity to sulfur-bearing minerals or stibnite, SBS, and it's formed in association with key metals such as copper, lead, and gold. Our Alturas project presents a compelling case for investors as we have high grades, and I'll step you through the project and why Alturas is a standout project and aligns with Equinox's growth strategy. I'm clicking.
All right. It looks like I might have to drive it for you. Sorry.
Thanks. Yep, we could go to the map now. Thanks, Andrew. So at Equinox Resources, we've built a strategically diverse portfolio of critical mineral projects spanning multiple jurisdictions and commodities essential for the future. Our portfolio consists of high-value projects across North America, South America, and Australia, each targeting metals crucial for modern industry, energy storage, manufacturing, and infrastructure. Our Alturas antimony project is located in BC in Canada. We have a titanium project called Mata da Corda in the state of Minas Gerais in Brazil, where we're building up to a mineral resource. We're getting some great intercepts there of 70 meters, up to 12% titanium. It also comes with rare earth and niobium credits. We also have a rare earth project in Capagrande in the state of Bahia in Brazil, which hosts monazite, sand, and bauxite. And then we have our Hamersley iron ore project in the Pilbara in Western Australia, which is a JORC-compliant direct shipping resource of 108.5 million tonnes at 58% iron, which is only a fraction of the 450 million tonnes across the mining lease. So each of our projects at Equinox offers a strong growth opportunity for the market, driven through resource scarcity and supply chain constraints. So the Alturas project is strategically located in the Slocan mining division, southeast of British Columbia, an area rich in mining history, known for its high-grade silver, lead, zinc, antimony, as well as metallurgical coal deposits and projects. The project sits 15 kilometers northeast of New Denver in a region supporting mining for over a century. One of the standouts for our project is its infrastructure and access. We have road access up to the project. Then we have sealed roads leading direct to major highways. Alturas is just 100 kilometers from the Canadian Pacific rail network, providing direct access to the Port of Vancouver if you want to export any product. And it's also in very close proximity to two major antimony smelters in North America who we are engaging with. It's actually just 400 kilometers south of a well-known antimony smelter in Montana, and we're looking at processing options there. The project is also surrounded by ongoing mining operations as shown on the map, with a combination of the strong infrastructure, excellent market access, proximity to processing facility. We're kind of well positioned where we are in BC. So the Alturas antimony project isn't just a promising exploration target, it's a proven historical mine which produced antimony back in the 1950s and 1926 from the historic Alps Alturas mine. Significant early producer of exceptional high-grade ore. During its operating years, the mine reported direct shipments of ore averaging an impressive 57.2% SB, with peak concentrations up to 60% SB. To put this into perspective, these are one of the highest grades in the world. The project in those years shipped out approximately 100 tonnes of high-grade ore to smelters in Scotland, in Glasgow, as well as smelters in New Jersey City and Chicago in the States. The historical records confirms that Alturas is a well-endowed system with proven ability to produce high-grade ore. Supporting this, the images here show some of the old historic mine workings, the entrance to the old mining attics, the underground tunnels, some of the mining equipment left behind that our geological team have uncovered. What makes the project exciting is, despite the historical production nature, the team have found out that much of the mineralized systems is still untested with modern exploration techniques, and our goal is to systematically explore and unlock that high-grade potential. So, building on the historic production success of Alturas, we've moved quickly just before the snow season last year. Our exploration campaign confirmed the presence of ultra high grade antimony across a 1.5 kilometre long shear zone, and in section there's widths of up to 500 metres across that shear zone. And sampling has delivered exceptional results, standout grades confirmed from that historic mine up to 69.98% antimony. Pure stibnite is graded at 71.4%, so we're kind of reaching that pure grade stibnite, and the grades are there on the page from some of the rock chip samples the team have collected. The mapped shear zone extending over the 1.5 kilometre long is within the 6.3 square kilometre project area, comprising of the old mining attics and an open cut area. The location diagram on the top right illustrates the continuity in the mineralisation across that shear zone, with key sampling across that shear zone reporting those high grades. We've also found a copper bearing system east of the property of up to 1% copper, which kind of outlines antimony doesn't tend to come by itself, and we have a copper bearing system over to the east. We haven't explored further west, but from old historical reports, there's reports of up to 1,500 grams per tonne of silver to the east, which we're hoping to get across once the weather permits. Our team will actively start surveying that terrain to the west to assess the geological formations and look at the mineralisation, and then start mapping across that entire strike length. It kind of confirms with the early movement, Alturas is a truly high-grade antimony system with significant upside. So, as part of our near-term development pathway, Equinox is advancing the project with a structured and disciplined exploration and development strategy, ensuring we maximise value through efficiently de-risking the project. We have a notice of work permit in submission and approval process that we are monitoring, and we are in consultation on land use, which is currently underway. Geophysical and field mapping would be undertaken soon once the snow clears, and that systematic airborne magnetics and radiomatic surveys will help define drill targets. And then we're going to kick off a diamond drill campaign expected to commence following the field work on the targeted areas across that 1.5 kilometre long shear zone to kind of then highlight the extent and the depth of the antimony that we see at surface. As part of the luxury of the notice of work permit, we have the ability to extract 10,000 tonnes of high-grade material to generate cash flow. And beyond this, we'll end up submitting a full 75,000 tonne per annum small mining permit based on that initial drill program results. But the key thing is for us to extract that 10,000 tonnes, and at today's antimony prices, that generates revenue for Equinox to help develop this project. And we're in discussions with offtake agreements regarding that extraction pathway. In British Columbia province in Canada is actively supporting development of critical minerals with a dedicated critical minerals office now in place, provides regulatory guidance and funding support, facilitates First Nation engagement and agreements, streamlines permitting, project approval timelines, advocate for single and coordinated environmental reviews. The goal is clear: reduce regulatory red tape and bottlenecks to accelerate approvals and encourage investment. At Equinox, we are engaging with the mining ministry, and this presents a timely opportunity with BC focused on critical minerals such as antimony, and Alturas is well positioned to benefit from this new permitting landscape and increased investor interest. So in summary, Alturas has the potential to be a low capital cost, direct shipping in stage one, high margin antimony development, a rare opportunity in today's market. To summarize, it used to be an old historical mine. We've got boots on ground that have confirmed those ultra high grade results of up to 70% stibnite. It's located in an outstanding tier 1 mining jurisdiction with strong infrastructure, significant exploration upside with mineralization confirmed across an open cut and within the underground mine attics. Some of those old photos go in 50 meters deep and the team could see stibnite across that entire wall. Significant, strategically located North American supply chain, reducing the reliance on potential foreign imports or us exporting through smelters located in North America. We have a 1.5 kilometre long shear zone with heaps of upside. Permitting is underway with a clear timeline for near-term development. And our key there is to really extract that 10,000 tonnes to get some cash flow. That kind of concludes my presentation. Open to floor, any questions?
Excellent, thank you, Zach. Great way to finish our antimony webinar. Just a couple of questions. Just in regards to the drilling program, can you run through sort of the timeline and expected milestones as you move towards resource definition?
Yeah, our planned drilling program at Alturas is designed to define that high-grade initial exploration that we did along that 1.5 kilometre long shear zone. We will begin with a targeted diamond drilling program to confirm continuity, depth of extension, grade distribution, focus on the areas of the historic high-grade production and our recent assays. The key milestones include doing the geophysical work initially to identify those drill targets, the field work, and then kicking off drilling. As part of our stage on, I don't plan to build into a resource initially. That will come in the future. Let's extract the ore, get some cash flow, and then we'll kind of develop processing later on. So these steps kind of near-term cash flow and future development into the future.
And in terms of being on the ground in BC, are there any, how's the access, how's the infrastructure, and importantly, how's the workforce?
Yeah, we've got a great team within BC and Canada. I actually passed up a lot of antimony projects within Alaska and BC, which tends to be high-grade hotspots, even some projects up to 38% from old mine workings. But when you take a step back and look at these projects in Alaska or other parts of BC, you need to look at the infrastructure, and infrastructure was lacking in those areas. So I had to walk away from those deals, but ultimately Alturas is situated 15 kilometers from a town, New Denver. There's roads, there's rail in place. There's a road to a smelter, which is 400 kilometers away. We have a trail road up to the project site. It is rugged terrain, but great infrastructure in place to kind of access the project area.
And can you provide some insights into the level of interest in antimony in BC, in Canada? Obviously, we've heard from Australian-based companies with their projects, but just tell us, can you provide, I guess, just this global sort of overview of the level of interest?
Yeah, just because of the export restrictions from China has sparked a frenzy. There's come across antimony projects all across the globe. There's actually a lot kicking off in Thailand these days. But what we're seeing in that North American pocket with Alaska as well as BC and also Quebec, just ultra high grades, which as part of our stage one, we're just looking at a DSO product, getting ore off the ground and straight to a smelter and removing the need for beneficiation. So compared to other projects ranging from anywhere from 0.5 to 4 or 5% antimony, the compelling case for what we're seeing in that northern part of North America is high grade with some great gold projects. You'll see some other ASX-listed companies like Nova Minerals who has some great gold within their Alaska deposit and some very ultra high grade stibnite as well. And our stage two, as part of that process, is looking at building a concentrator later on to kind of get a 65% SB product out to market for optimal smelter returns. But US Antimony Corp, Perpetua, they're all trying to find their sources within the US, but where it's held is within Alaska and BC and Quebec. So a lot of interest in those regions, and grade is king, which Alturas has.
Absolutely. So thank you very much for your presentation and your time today, Zach. As I said, a great way to finish off our antimony webinar. So I'll leave it to you for just a final word.
Thanks, Andrew.
So on behalf of NWR Communications and all of the presenting companies, thank you for your attendance today. I guess for me, one takeaway from today is that we are still trying to establish a universal pronunciation of the word antimony, but more importantly, that there is significant global interest in antimony projects. As we've heard from Carlos and the other presenters, the outlook for the antimony price remains very strong. Everyone who's registered for the webinar today will receive a follow-up email, and if you do have any further questions, please direct them to this email. You'll receive a link to the recording, which will be on the NWR YouTube channel. There are plans for further webinars covering other niche critical minerals, so stay tuned. Thank you and good afternoon.